So Canadian families are owning more real estate and actually living in the homes. This is data that was recently presented by the Canadian Housing Statistics Program. Now, this data is a little bit old, I'll be honest with you. It's from the end of 2022, but it's probably pretty relevant today considering where things are at. And in fact, the data is quite interesting. It shows that there are more Canadian homeowners and users living in the properties than investors than in recent years. In fact, the highest it's been since 2018. So the big question is that really impacted the marketplace? Is that going to turn over more? And what does this mean going forward for people who actually do want to invest in real estate moving into the future? Now, the data itself covered recently built homes that were built in 2016 or later, and homes that were either rented out or owner occupied in the country, obviously of Canada. Now, for the sake of this actual data, it's only considering 5 provinces because those are the only ones that actually carry rental data that's publicly accessible and available. Now, the data unsurprisingly suggested that one of the primary reasons that people were buying less properties when it comes to investing is because interest rates were higher. In fact, interest rates increased over 100% over the course of 1 year from 2022 to 2023, and then obviously continued to increase substantially up 200 and 300% from that time going forward, which negatively impacted cash flow, which is what you're seeing all over the news and all over social media and YouTube right now. So I'm not telling you anything you don't know, but what I am telling you is that the data is actually showing that there is a significant amount less people who are owning these new occupied properties than what you might think otherwise. Now, this might be surprising, but the province that had the most significant increase over the course of the last few years in terms of owner-occupied units was actually Nova Scotia. Now, unsurprisingly, that probably has a lot to do with the affordability and people leaving different provinces to move to Nova Scotia because of its cost of housing being significantly less. But even BC and Ontario saw more units that were owner-occupied than they had been previously. Same goes with New Brunswick and Manitoba in terms of properties that were owner-occupied versus investments. If we're looking back historically speaking, back in 2020, we saw exceptionally low interest rates over the course of the remainder of the year after the spike in March of 2020. When the cost of rates went down, we saw more and more interest in the marketplace, and a lot of the previous investors started jumping in as soon as they could when they saw price points starting to increase. Now, following towards the end of 2020 and into 2021, as interest rates remained quite low, we saw more of the masses jumping into the marketplace and purchasing properties at record low interest rates, although the cost of housing started to increase. Now, in 2021, that prompted a lot of junior investors or people who were more amateurs who had not purchased properties before to jump in the marketplace. And yeah, we saw everything from pre-sale purchases to jumping in and flipping to everything under the sun because of the rapid price increases and low interest rates. Well, that really only lasted for about a year and a half until 2022, when the interest rates stopped and house prices started to go down, along with interest rates increasing during that time. Now, the thing that's most interesting about this data and information is that continuing on until the end of the statistics that are available, it's shown that owner-occupied homes were increasing over that time. Part of that had to do with the fact that we saw a higher growth of population during that time, and ultimately interest rates going up means less investors are interested, along with higher house prices making cash flow not work out. But the question that we'd like to know and really ask is, are investors still jumping into this marketplace right now? And does it make any sense for them to continue to do so? With the government having come down with anti-flipping rules, anti-flipping taxes, decreasing the ability of Airbnb availability, providing for more rental units and owner-occupied homes from that perspective, are people still investing in Canada, and if so, where are they? Now, I went out and looked up some statistics, and there were some recent surveys to suggest where Canadians are in terms of real estate investing. Now, a lot of Canadians have soured on real estate investing because interest rates have gone up 4% over the course of the last couple of years, specifically looking for people to sell off properties that were no longer cash flowing or trying to sell off assignment units. But there are a large group of Canadians that still own investment properties and actually want to continue buying investments despite the market, knowing where the numbers are today. In fact, a survey of 2023 suggested that there are 1/3 of condos in BC are investment owned, along with 1 in 5 properties in Canada being owned by investors. So it's not going anywhere anytime soon. A large number of those units are actually owner-occupied mom and pops, and not those large-scale multi-unit developments that you're seeing pop up everywhere right now. So again, to answer the question, does real estate in Canada still make sense in 2024? I think the answer is yes and no, and it's going to be different moving into the future depending on who you are. We saw a massive amount of price appreciation in the years 2020 through 2023, and a big part of it had to do with low interest rates. From 2023 to 2024, we did see some minor appreciation, but nowhere near what it was in the past. In some cases, property values have decreased. The reality is, with interest rates going down again, there will be some pressure upwards on price points eventually as supply is outrun by demand. And of course, more people are interested in the marketplace, but we cannot expect inflation to occur in the housing market like we did in the last couple of years. Not only are we in a position right now where people are nervous about where the market goes, but of course, rates will likely not hit 1% again anytime soon, which is not going to fuel the market like it had in the past. But is real estate still a good investment then in many situations? The answer is yes, in a different situation. Number one, everyone likes to invest in something that's physical and tangible and that they can control. Whether it's the ability to actually add value or add multiple units to a property, I'm still seeing people purchase real estate as an investment across the country in multiple different provinces and multiple different cities and making it work financially, but also making it work for the tenant. Real estate as an investment works very well when it comes to having a good synergy between the landlord and the tenant if it's a long-term property, or a good understanding of what the market needs in terms of a commercial or a residential renovation. I've seen people have success with minor flips, meaning they're purchasing the property, adding value, and holding it for 1 to 2 years before they actually sell the unit, and having a benefit on the other side where the end user comes into a quality product at a higher price point than the original person would have done. But I'm also seeing properties still work very well as a long-term rental situation. Now, you can debate whether or not the capital return for an investment property is as high as it should be or as high as it might be in different properties, but you cannot argue some of the facts. Rental rates continue to go up as time goes on, and we've seen that happen for the last number of years. And although it might not continue up at the same trajectory it has right now, it likely will continue to go up over the course of a longer period of time. Again, not in a straight line, but it will go up eventually as time's gone on. You can look back at any stat you want. We can flash one on the screen to show you. It always will continue to go up. Appreciation will continue to exist, and although appreciation will not happen the way as it did before, it will happen as time goes on. Plus, you can force appreciation. In addition to that, there are so many different ways to improve valuations of properties that we will see a lot of people take advantage of the benefits of being able to pull capital out tax-free and use that money for investments. There are so many ways that real estate investing does not work as well, whether it be trying to flip new units, assign new units in situations, and purchase properties in situations where cash flow doesn't make sense or you cannot make money on the unit up front. And so I think the reality is we need to be conscious that real estate investing, the game has changed. You need to be more analytical. You need to be more focused, more strategic, and more informed into what you're investing in. And the people that were not doing so are going to get exposed and lose a lot of money like any other investment on earth. So, are more people going to continue to purchase properties for themselves and not investments? The answer to that is yes. And are people buying their properties for themselves as an investment? The answer is still yes. We're going to have real estate as an investment as long as time goes on, with over 70% of Canadians holding their net wealth in their real estate holdings. This is not going to away anytime soon. My biggest recommendation for you, if you're trying to figure out if real estate as an investment does make financial sense for you, is do a few things. Number one, know your risk profile. Know how soon you need the liquidity or access to cash from your property. Know how comfortable you are with market changes. How comfortable are you with dealing with the potential of a tenant, whether or not you have a property manager or otherwise, and ask yourself the question, does it make more sense for you financially, and are you savvy enough to invest in the marketplace? Depending on the answers to those questions, you'll find out whether you should invest into real estate, and if you connect with the right people, you'll make money.